everyone. My name is Tori Manix. The purpose of this presentation is to walk through the market analysis findings, study, and conclusions, including recommendations for the Lake Forest Mall site in Gaithersburg, Maryland. Before I jump in, just a little bit of background about myself. I'm a vice president at Plant Moran Real Estate Investment Advisors. We specialize in development strategy and consulting throughout all stages of a project's life cycle, specifically on the owner and landlord side. I graduated from the University of Pennsylvania in 2013. I played varsity volleyball there all 4 years. I attended the Wharton School of Business, and currently I'm working in downtown Detroit on a project called the District Detroit. We oversee a progressive development that's revitalizing 50 blocks of mixed-use development, all centered around the new Little Caesars Arena. Just a quick table of contents. I'll run through the property overview and market areas, and dive into how I set my market study area prior to getting into the office, residential, and retail analysis, and then I will end with conclusions and recommendations. So I want to start just by quickly walking through the property. I know many of you have also looked at the same property, but I figured maybe it would be worthwhile just to see if there's any other information that I came up with instead. First of all, the site is 85 acres. Access-wise, it's located in very close proximity to a major thoroughfare in the Metro DC area, that's I-270. And the site has direct access from 7 different methods of ingress and egress. Overall, it has great visibility from a lot of local roadways that have a lot of high traffic counts, which I'll touch on later. Unfortunately, it does not have any visibility directly from I-270. The property is currently zoned as C2 General Commercial, which, based upon further study, there might need to be a planned unit development down the road, depending on the conclusions and recommendations, but for now, the zoning allows any proper use as far as office, residential, and retail, and any mixed use that anyone might want to put on this site. Overall, there's a lot of surrounding asset classes. Retail, there's a mix of big box and inline retail strips. Office, there's multiple suburban office parks directly southwest of the property, including major tenants like PNC Bank. Hotel, there's a lot of mid-scale hotel assets such as the Holiday Inn in Gaithersburg. Residential is the biggest use, you could say, around the site currently. There's a diverse mixture of multifamily apartment buildings and single-family home communities. And other than that, there's also some light industrial warehouse in the biotech corridor, which is directly adjacent to I-270 as well. Surrounding the site, there's a lot of built development, but there isn't a lot of available land the same size and open space as the Lake Forest site as well. As far as the site condition, for the topography, while it's also necessary to do a full site walk and geotech study to properly assess the topography of this site, it appears to be even grade across most of the acres. Since the land has been previously developed for a shopping mall, the site has been previously leveled to allow for pedestrian access and appropriate sight lines for the development. Still, there are some slight sloping areas on the site, but I don't think this is going to hinder any future development since a majority of the site sits relatively flat, as I mentioned prior. In addition, there are many trees that line the majority of the outside of the site, and some occasionally in the existing parking lot areas, but a lot of the major tree vegetation is mostly blocking the visibility from Montgomery Village Avenue and Lost Knife Road, as well as a little bit on Russell Avenue as well. There are some wetlands and water basins directly west of the site that will need to be studied a little bit further with the soil report. Overall, wet site conditions could impact the ability to develop certain areas of the site, but in general, most of it is a stormwater retention basin. I think this should be okay. And based off a search on the Montgomery County property records, the site is currently split into multiple tax parcels, And based off of further investigation, it appears that most of the big box stores actually own their parcel of the site, and the middle piece with all the inline tenants, the actual mall portion, is owned by the mall itself. So that'll just be something for a future owner that they'll have to work through with the city. So it's important prior to digging into potential uses to actually assess the site based off a certain amount of criteria and weight them based off their importance. To start, for roadway access, this is very important for all three uses. Obviously, the site is located in close proximity to the major thoroughfare, as I mentioned previously, and has a lot of access from the local roads as well. This is a plus for office, residential, and retail. For future residential users, the increased traffic could be a negative aspect in a suburban multifamily setting. However, due to the site size, I don't think it's going to be that big of an issue. Transit access. This is rated as a medium. It could be debated as a high, depending on what use you're looking at. Really, the Lake Forest Transit Center at the southeast corner of the property with bus access is the only direct access at the current junction. There's no really close access to light rail stations such as Amtrak. And in general, it's also a 45-minute to an hour drive to the Baltimore-Washington International Airport. This is a downside for many of the uses. Visibility, as I mentioned previously, there's no direct visibility from the main regional highway. However, I think a lot of the visibility from the local roads, which have high traffic counts, could be improved if some of the trees were removed. Adjacent uses. There's 3,000 professional office users within a 15-minute drive time. About 35% of the total housing around the area is occupied by renters, and approximately 1,200 retail users are also within a 15-minute drive time. And as I mentioned before, the topography, this is not quite as big of a deal because this can be neutralized during the pre-development and site work phase. There are some stormwater retention basins and open green space along the site as well. Overall, for all the uses, I would give each use an average based off of the site assessment, or a medium is probably better said. Not one generally jumps out as an initial, highest and best use solely based off of the site assessment. So prior to jumping into demographic analysis and other site condition assessments, it's important to first draw the primary and secondary trade areas for the study. So in order to do this, I took into a lot of different considerations. Since the Lake Forest site has many different physical and locational attributes that vary in importance, as I mentioned previously, it's important to look at certain attributes and assess them and weight them when looking at the area outlines. So one would be area type. The subject property is located in a suburban area as opposed to an urban core or a more rural area, and as such, the surrounding area is relatively dense in population in comparison to market averages. Geographic elements, there's many regional roadways that provide quick access to the site, and therefore they provide natural boundaries for those trade areas as well. And then competitive areas. This is especially important for the secondary trade area. In comparison to Gaithersburg, there's many other similar suburban city areas like Rockville and Kentlands. They need to be included because they heavily influence the market supply factors. So while there's many ways to draw trade areas, the most simple tool, as described by Heather Arnold, is using drive time factors. And when using a drive time factor, it really depends on the area. Like I mentioned before, this is a suburban area, so we're using a 10-minute drive time for the primary. You'll see that in red on this map. And the secondary is the green area, and that's 15 minutes, and that includes some of the competitive areas like Rockville, which will become more important later in this analysis. Before we start to look at other demographic factors in the analysis, it's important to look at other criteria that shape the site and the attractability of the site for future development. To start with traffic counts. The traffic counts have volumes on this site that are above normal averages for a comparable suburban area. For example, Montgomery Village Ave, the road to the northwest has over 45,000 cars per day, as defined by two-way average daily traffic counts that pass this location. North Frederick also has over 35,000 cars per day. So with traffic counts of over 30,000 on some of these local roadways surrounding the site, the direct ingress and egress to the site could be a little congested, which is great for retailers because they want to drive critical mass. However, for a residential site, this might not be as advantageous because it's too congested, too noisy, might not be the best living situation. Still, this could be addressed through better transit systems. However, unfortunately, the only transit available to the site currently is the bus stop, which I mentioned earlier. There aren't any local rail lines or regional rail lines, so when you're looking at other competitor areas like Bethesda, this isn't quite as attractive because it takes a little bit longer to get to the area from, say, Washington, D.C. urban areas because there is no direct regional rail line. In general, there still are some great community spaces and nearby amenities. There's outdoor parks such as Brown Station Park, as well as a golf course. There aren't necessarily some major parks and green space adjacent to the site, but overall there's the library across the street, and there are some community areas for people to go. In addition, there's many restaurants, soft good, and grocery store retailers to attract future residents. For example, there's an existing Trader Joe's, a Costco, and Sam's Clubs, all very in close proximity to the site. And for a suburban area, there's also many local restaurants like Dogfish Head and also the chain food restaurants you would expect, such as Panera. As I mentioned earlier, there are some great outdoor areas. In addition to Brown Station Park, there's Seneca Creek State Park, which is a 10-minute drive or a 21-minute bus ride from the subject site. A couple of other quick things to touch on. The Gaithersburg violent crime and property crime indices are both above national averages. Overall, it's apparent that the crime index in Gaithersburg is above standards and may be a deterrent for future residents of the area, especially with children. That being said, I think the crime rates hit a large area, and I think the area that the Lake Forest site is specifically in has lower crime rates in general in comparison to the entire city proper. So you can see the site here is outlined with this star. It goes from dark as the safest to the lighter as more unsafe. Unfortunately, the areas around it seem to be a little bit safer, and Lake Forest just sits in the middle of an average safe area. In addition, the main public system servicing the primary and secondary trade areas is Montgomery Public Schools, which has 205 schools and is the largest school district in Maryland and the 14th largest nationally. In the primary trade area, there are multiple elementary schools, middle schools, and high schools available for public school attendance. On average, the high schools have about an 84% graduation rate, which is just slightly above the national average of 83%. So first use we want to look at is the office market. Overall, there's over 4.7 million in square footage inventory across the building classes A, B, and C. The vacancy rate in Montgomery is about 14.2% average, and you can see here that some of the vacancy rates for Gaithersburg area are trending a little bit higher than that. However, Montgomery County in general tended to have more positive net absorption, and unfortunately Gaithersburg was seeing a lot of negative absorption, which usually tends to mean that many tenants are moving out of the area after their leases expire. The average asking rent gross is $22 a square foot. That is well below the average of $31 per square foot in Montgomery County, and there's no new construction underway. In general, in the Montgomery area, there's over 2.6 million of square footage currently under construction, especially in the Rockville and Bethesda area, which have many build-to-suit transactions going on, including the 825,000 square foot headquarters for Marriott International. They were previously there and actually decided to stay there, were enticed to stay there, and now are building a build-to-suit headquarters for themselves there. Another thing I want to touch on are the economic trends in the area. The projected job growth in suburban Maryland remained broad-based in the second quarter of 2018. In general, there were some strong gains in construction, retail, and professional service sectors. As you can see over on this Figure 5 year-over-year employment growth. Compared to job growth for the entire Washington, D.C. metro region, suburban Maryland captured 37% of total job gains, generating 6,000 new non-farm payroll jobs year to date. Overall, with several new-to-market headquarter relocations, such as Booz Allen Hamilton and Marriott's decision to stay in Bethesda, as I mentioned, Maryland seems to be well poised for additional job growth. The only issue is that even post-recession, Montgomery County has seen slow job growth from 2010 to 2013 at 1 to 2% a year on average, which ultimately, when you're looking at office tenants coming to the area, job growth is a direct driver of employment-driven demand. A huge component in office analysis is looking at market comparables. So before looking at market comparables, it's important to set some criteria for the comps that you're looking at. One, they should be located in the primary trade area first, but you can expand to the secondary trade area for applicable developments, especially for a smaller office market. Two, it needed to be built and or renovated within the last 15 years and held to at least a Class A or B rating. And then three, looking at larger developments that would be commensurate with the future development size and the subject property, mostly just due to the available footprint. It wouldn't make sense to build a small building on such a big site. So, looked at a lot of comparables. I pulled three out to look at in particular. One is the Redland Corporate Center. This is just down the street in Germantown. It is Class A, built in 2009. It's 88% leased. This was a phase 2 project as well, and they're looking at $34 per square foot gross in comparison to the $23 per square foot average we saw in Gaithersburg. Comp number 2. This is in Germantown as well. Class A, built in 2003. It is 77% leased. It has a $25 per square foot gross rental rate. And lastly, 77 Upper Rock. This one is thrown in there in particular because a large tenant just moved out. It was built in 2005. It was completely tenanted basically by one company. They decided not to renew and they moved elsewhere, and now you can see that it's skewing our comps at a little bit at 1.9% leased. They're asking for $32.5 per square foot gross. Overall, based off the market comp analysis, there's approximately 134,000 square feet available in Class A and B space in the secondary trade area when only looking at large user floor plates. And in addition, the 77 Upper Rock adds another 230,000 square feet for a total of 362,000 square feet of vacant space. Still, vacancy rates remain low for Class A space in the primary trade area and have positive net absorption rates. However, when you're looking solely at Gaithersburg, this isn't really the case. I talked to a local office broker, and a majority of these new build-to-suit developments and buildings that are fully leased at above market rental rates are in areas such as Bethesda and Rockville that provide quality amenities and a more urban feel, which is desired by tenants. Some of the new companies in the secondary trade market, they continue to search for cutting-edge open office space to attract younger talent from top-tier universities. And the broker also just mentioned that the supply of Class A and higher-end Class B space is thriving. However, there's some tenants that are getting priced out of the places like Bethesda because of the above $30 per square foot gross rental rates. The evidence of the construction pipeline or lack thereof in Gaithersburg may be because it's viewed as a more suburban office park area, or just in general it doesn't have a massive office contingency in general. So that's a perception from tenants that will have to be overcome in order to attract people to this area. The next use we're going to analyze is the residential use. This is when you really start to dig into some of the demographic trends, such as population. Overall, over the past 8 years, the population has steadily increased, which has resulted in a total growth of 11% from 2010 to today. Also, the households has been growing at a very similar pace as well. The median age in the area is 35.7, which is much lower by almost 3 years, which doesn't seem like a huge difference, but in these stats it is, compared to the U.S. average. Median household income is well above the U.S. average with $85,000 a year, and people on average spend about $21,000 a year on their residential expenditures, which ends up being about $1,800 a month, which may not seem like a lot, but when you compare it to the median home value of $340,000, there is some room in there for potential high mortgage payments coming from that annual residential spend, which is important to try to figure out what kind of demand there might be for some new residential product that will probably be in the Class A higher end rental rate range. Within the area, it's important to note as well that 53.6% of the housing is owner-occupied, and of those owner-occupied houses, 90% have a mortgage. Within the area, we looked at a residential rental summary. The occupancy rates in general are hovering close to 98% and 94% between Class B and Class A respectively. That shows that there's some potential demand pent up for some residential on this site. When you're looking at residential rent summaries, these have been growing year by year in favor of higher rent payments. I think within this market, with pent-up demand, it's anticipated that they could push above market a little bit for some Class A product. Even so, based off these average apartment sizes, the 2-bed, 1-bed are pretty much in line with where you would expect them to be square footage wise. You're still well below what people seem to be willing to pay for $1,800 a month for their average annual residential spend versus what people are actually paying in rent. So there is some room, some threshold within there to maybe push those up a little bit as well. When looking at the current housing stock or the supply, as I mentioned earlier, there's averages of 95% occupancy rate within the market, which suggests that there's pent-up demand. The average household size continues to grow. In the current housing inventory, there's over 60,000 housing units in the primary trade area and just about 119,000 within the secondary trade area. This includes a combination of product type, including single-family and multifamily rentals and for sale units. The other thing, after looking at the Montgomery County residential pipeline for development, you can see that there's a lot of stagnation in residential unbuilt developments through 2009, and you can really see the mixed use portion start to kick up in 2010, 2014, and then even more from 2015 to present, which is obviously a sign of better economy. However, if you notice, a lot of these mixed use developments as a percentage aren't containing any residential, so that indicates that there might be an opportunity to do some mixed use with residential only portions to it as well. Overall, a majority of the residential in Gaithersburg is townhouse style single family like brownstones rather than apartment style high density multifamily. As such, there might be an opportunity to capitalize on a relatively young market segment like the mid-30s through apartment condo style rentals. At this point, the market can probably support a certain amount of gap filling, kind of unique product that wouldn't require any reduction in rent or sales per square foot to fill them. I think that by varying product type and price points, you can offer an appeal to different demographics and age groups. And after looking at a lot of comps within the market, it's clear that while some places currently have some amenities like pools, there's an opportunity with this size site to add a pool, a fitness center, some dedicated parking options that would really allow a developer to charge a premium rate above market to enhance their returns and drive a premium residential product as well. Jumping into retail, the primary trade area contains solid population growth coupled with above national averages on both average and median household income and median home value. You can see in the employee demographic projections and household projections and visitor projections as well. There's continued growth from current to 2020 to 2025. One thing I want to touch on before we jump into capture rates and supply and demand analysis, the Rockville Town Square was a great case study to look at a large area site that used to be a shopping mall. It was about 500,000 square feet. It had previously gone bankrupt, been sold back and forth to different investors. It was ultimately closed. Now, today, on this 12.5 acre site, it's a transit-oriented redevelopment that contains retail and a residential core. It also includes rental and condo residential, parking garages. Phase 2, they're going to be adding some office, but Rockville Town Square really has set an infrastructure and base for the thriving office market that you see around it as well. And that'll be important to note as we jump into our conclusions later. But in general, in Gaithersburg, more than half the retail in the submarket is general merchandise, apparel, furnishings, and other at 55%. The most common shopping centers are hybrid centers, which usually contain both neighborhood goods and services, and GAFO retailers as well. The area struggles to attract customers, which is evidenced by the issue of Lake Forest Mall. Again, that's a different development type with a more concentrated area. However, it seems as though there's a disproportionate amount of GAFO retail versus neighborhood goods and services and food and beverage. So in order to assess the current supportable retail or demand metrics, it's first important to set capture rates. And the capture rates represent the retail submarket's ability to draw customer expenditures within the context of a larger market area. They're influenced by amount, accessibility, and quality of existing and proposed retail development, as well as market competition. In order to set the capture rates, which you'll see in this column, I looked at competitive differences from nearby trade areas such as Rockville, and looked at other criteria as mentioned before, such as roadway and transit access, visibility, walkability, etc. The other thing I looked at was the type of good or retail type. So the type of retail impacts capture rates due to consumer behavioral patterns. So for example, GAFO retail will have a lower capture rate because people are usually willing to drive further distances for these types of expenditures. So as a general rule of thumb for my analysis, I use 65 to 75% for neighborhood goods and services, 50 to 60% for food and beverage, and 25% to 35% for GAFO retailers. You can see when you take the total expenditures for 2015, apply your capture rates, then divide those by your retail sales per square foot, you get your supportable retail numbers, square footage over here. And when you assess that against the demand, I looked at a couple different things. So one is retail will function best when it's market appropriate. So when it's suited to the demand of the surrounding population and located in a safe and walkable environment. Based off the current supply metrics, which you'll see down here, the market is oversaturated, especially in the GAFO subsector. It is important to note that the Lake Forest Mall is counted within this supply, which accounts for large square footage allocation, not only in the GAFO sector, but in general for the other ones as well. As such, I did an adjusted supply where I removed portions of the Lake Forest site, and utilizing the adjusted supply metric, it's clear that there is a need for NG&S retail in the PTA due to a lack of quality supply and pent-up demand as shown from the supportable retail analysis numbers. While the F&B supply seems to outpace demand currently, it's likely that there still lies a potential for diversification within the market or just general improvement from the F&B offering. So you'll see here, I took the supportable retail figures from up here. I also ran those numbers for 2020 and 2025, and then adjusted them against the current adjusted supply. So the green represents areas for current demand immediately. The yellow is more of a proceed with caution, but probably an opportunity. And the red is a do not build. It is oversaturated currently in the market. So now, after looking at the site assessment, the by use analysis, we're going to jump to our conclusions, starting with office. After assessing the market data and trend analysis, it's apparent that Gaithersburg and Montgomery County office markets have an interesting balance of supply and demand. As I mentioned earlier, within the primary trade area, there's no new construction in the pipeline, and vacancy rates for non-Class A office space are at or above average in comparison to the county as a whole. Generally, it appears that Gaithersburg has a small office market with limited and weak demand from new tenants. On the other hand, the lack of Class A office space in this market could be a reason for little to no leasing activity or construction pipeline in the area. Still, after looking at it, the recommendation is to not build office at this current time. The market demand is just not strong enough in Gaithersburg to justify office development on the Lake Forest site. And in general, it really lacks some of the amenities that Class A office users will be looking for, like immediate transit to the site, which makes it really hard to get people to relocate from other metro areas when comparing it to competitor markets. In addition, Gaithersburg lacks a general perception as a desirable office location, mostly due to the lack of major tenant and company inflow already in there and limited construction interest. The Lake Forest site will probably be viewed as more of a suburban office park type to many people due to the lack of walkability and widespread space around it. And based on the competitive market analysis, there's just really a low likelihood of capturing any of the office absorption in the area. And as a speculative office building, it's really just not recommended to search and reach for a tenant at this point. Jumping into residential. The rising rental rates in both Class A and Class B rents outpace the Washington Metro average in terms of rent growth year over year. They went up about 1.8% and 3.8% respectively. Investors continue to target the suburban Maryland market for value add opportunities, and there's 22 properties traded in Q1 alone, and the rental rates are growing as a result of that. In addition, there's strong millennial population growth with the average median age of 35 years old, and population growth is a relatively good sign in a region market of people wanting to move somewhere, wanting to maybe not pay the full prices of other DC metro areas that they might be getting priced out of. Overall, the recommendation, based off of favorable growth rates and pent-up demand as seen in the previous market comp set, I think this site could support some residential use. I think the Lake Forest site presents a unique opportunity to develop varying product types to appeal to multiple demographics and varied densities throughout the site to appeal to both urban and suburban draws. For example, one part of the site could be developed with townhouse style units, while the other side is developed with maybe some lower density single family homes. This development plan has been replicated on other large sites throughout metro areas and has proven to be successful. In addition, the Lake Forest site already has infrastructure amenities such as roadway access and adjacent uses such as retail, which will draw more residential users. And last but not least, retail. The Lake Forest site characteristics and surrounding market supply demand create an opportunity for retail development on this subject site. As I mentioned earlier, the market demand for neighborhood goods and services and F&B type retail is evident by the total annual capital expenditure and capture rate analysis. By repositioning assets, Gaithersburg really could reduce the supply of GAFO square footage, a lot of that within the current Lake Forest mall site, and align that with the current demand for NG&S and F&B. Overall, the site access, the layout, the visibility really provides a solid infrastructure for a new type of retail, not the one currently on the site. And finally, we get into the recommendations. I recommend a phased approach for this site, purely due to the size. I think that starting phase 1 with about 100,000 total square feet of retail, most of that being concentrated on NG&S and F&B, 80% of the site, to hit that demand that I talked about earlier, and then fill in the rest with some GAFO retailers, only about 20%, and within that focus on some unique high-end retailers that usually draw people to a site, maybe like an Apple store. You start to maybe hit some of the Lululemon, some of the really popular tenants that will drive critical mass to the site. It's important, though, within all of this, in order to be successful, to have a huge concentration on placemaking in an urban, walkable community. And this really just goes back to the case study on the Rockville development. Creating something that doesn't feel like a suburban mall site, but really feels like someone's able to walk around in more of an open air environment to hit those different retail stores. The other piece of the first phase would be residential. You'll see this in blue. I recommend a total of 300 units to keep up with demand and also be commensurate with some of the current construction pipeline in the area. As mentioned earlier, I think that in the past, most housing in Montgomery County consisted of detached single-family units built on vacant land. So in keeping with new demand from residents, new housing construction needs to feature more densely clustered single-family attached and also multifamily units to continue the growth and demographic changes in the area. As such, I think it's important to do some multifamily apartment-style rental units, and then also to keep in pace with some of the surrounding residential that's already existing, keep with some townhouse style, and based off of a further market analysis in residential, those could either be for sale or for rent. Since a majority of the housing in this area is owner occupied, it probably makes sense to start with a for sale product on the site. And then keeping in phase 2, based on success of the retail, there's an opportunity to continue to expand retail with maybe some additional entertainment-based offerings. So for example, experiential tenants, so Legoland, Sea Life, Top Golf, some of these tenants that need a lot of space, which the site can offer, and also drive a lot of families, drive a lot of visitors in general to the site, which will be great for the other retail as well. And then, while an office use is not recommended at this time based off the market dynamics, I think a portion of this site should be retained for future new age office space to allow for the market to continue to mature. There's a lot of demand now with new office trends for some of the new, smaller co-working office space, which I think would be a natural complement for some of the retail and residential uses. Still, a large suburban Class A office is not recommended on this site. If any office is going to be done, it really needs to be some of the new age tenanted space that people are looking for, especially as tenants continue to reduce their square footage, go to more open office concepts, and really look for buildings that will match their millennial and Generation Y demographic base. Across all these uses on a site this big, it's important to have open green space provided as an amenity for all future users and especially the residents across the entire site. So there's already some natural greenscape to the southeast with some of the site water retention and pond areas. I think it's important to play up on some of that, have some open area, maybe consolidate parking so it's not just a sea of parking area, but have some parking garages as well. In order to keep the site and make it feel more urban and really get away from this kind of mall feel that it has right now. So as part of the market analysis, it's important to also look at available opportunities to support a future development outside of just demographic and use analysis. So starting with enterprise zone tax credits. Enterprise zones, through a program established in 1982, provide local property and state income tax credits to businesses that create jobs and make capital investments. The Lake Forest Mall site was recently added to the Old Town Gaithersburg Enterprise Zone, which expires on June 14, 2028. Overall, this incentive offers a 10-year tax credit against local real property taxes on a portion of the real property expansion, renovation, or capital improvement. This site would be ripe to use this tax credit. There's also potentially some other state tax credits or state programs and federal programs that might be available to help offset the higher construction costs and potential risk in some of the rental rates moving forward. Another piece to look at would be a public-private partnership. Due to its size and prominence, the Lake Forest site provides an opportunity to capitalize on a public-private partnership due to a shared vision for the redevelopment of the property between the municipality and a future developer. Really, at their core, a public-private partnership is considered a creative alliance formed between a governmental entity and a private developer to achieve a common purpose. And as I mentioned previously, due to the high probable cost of redevelopment in this current economic time, a private developer could easily benefit from other incentives, tax breaks, and just general political assistance to push through zoning and entitlements that a municipality can offer to them. And on the other end, usually a municipality will probably ask for some things in this process and ensure that the developer creates public spaces to revitalize the site to meet their expectations. So on that end, it's really important to start to look at placemaking. So for the retail piece and the residential piece, I cannot stress the importance enough of making this feel like a new age kind of rock-filled town square site where you have a main street, a public plaza, pedestrian-oriented shops and restaurants, where it really feels like it's almost a town within a town. The large site acreage will really be a hindrance if this is not done properly, and this could really set up future development around the area as well, especially with the access to the highways and bus systems and the potential Purple Line transit system that is coming into the metro area. This site is prominent enough where if it's done correctly and drives enough critical mass, it could make a huge difference for Gaithersburg's local economy in general. Those are my recommendations. Thank you for listening. If you have any questions, please feel free to reach out. Thank you. Bye.